welcome to Trading Day. I'm Lindsay Biscaya. Let's get to some of the stories we're following in the BNN Bloomberg newsroom for you. We are watching shares of Warner Brothers and Paramount today. CNBC is reporting that Warner Brothers is expected to reject Paramount's hostile bid. Streaming giant Paramount offered a $108 billion U.S. bid, along with Oracle's Larry Ellison backing the offer with a personal guarantee. The decision could keep Warner Brothers on track to pursue the rival Netflix deal, which is valued at more than $82 billion U.S. And according to Reuters, China is mandating at least 50% of the equipment that chip makers use for new capacity is made domestically. Reuters is reporting the rule is not publicly documented, but chip makers have been informed by authorities that they must prove their procurement through tenders. The requirements are relaxed for advanced chip production lines where domestically developed equipment is not fully available yet. And copper is headed for the longest winning run since 2017. The metal's December rally is being powered by the prospect of more stress in the supply chain. Traders have been rushing metal to the U.S. in anticipation of potential tariffs, tightening the market for the rest of the world. Futures have rallied by more than 40% this year, setting up the biggest annual advance since 2009. And we'll take a look at the TSX today, trading higher after a bit of a down day yesterday, but we did see some record highs last week, and we're seeing a bit of an upswing today. Not so much the case in the U.S., though. If we take a look at some of the major markets down south, they're particularly lying flat today. Not much movement. The S&P 500 basically flat. Dow Jones is down by about 0.1%, and the NASDAQ also pretty flat at the moment. We're talking about big updates in today's markets and top picks to watch out for. And joining me now is Eric Jackson, President and Portfolio Manager at EMJ Capital. It's good to have you today. Thanks for taking the time.
Hey, good to be with you, Lindsay.
Just before we get into things and really dive into certain stocks, I wanted to just ask you about what you saw there with the markets in terms of what we're seeing on the second last day of 2025. Any surprises, or is it usually pretty unchanged to end the year?
Well, I think the big surprise from my point of view is just how much in 2025 there's been nervous energy around AI being a bubble. And yet when you look at the forward multiples of most of the large tech players and even the small tech players across the spectrum as we close out this year, basically, these are at kind of normal multiples compared to the beginning of the year and to last year, and it's certainly nothing like what we saw during the craziness of the .com era, where basically everything just sort of like went up and to the right. So I think there's no bubble at all from my perspective, and as we move into 2026, I think people are in for a surprise at just how powerful the whole AI investments have been, and how we're going to start to see companies really prove to the world just how much more profitable they can become, how much more efficient in harnessing the power of AI.
Yeah, I want to talk more about that in a moment and how these are kind of long-term bets, you say. But just first of all, there's some big news coming out today when it comes to Meta, leading the Mag 7 stocks today after the news that it's going to buy that AI startup Menace. I'm wondering if you have any thoughts on that and whether this could maybe propel at least Meta into 2026 on a high note.
Well, usually when I see these big deals, Lindsay, including, we saw one last week with NVIDIA on Christmas Eve, actually. My first knee-jerk response is, what's the weakness that this big company is trying to cover up through a big acquisition? And I think Meta has been on a bit of a hiring spree to try to beef up its AI team, and they have the money to do that. And so you certainly can't discount them. And now they've made a big acquisition about a year ago with Scale AI. Now they have the one that they've announced today. For me, it seems to be like they're trying to catch up with everybody else. And so I see this as coming from weakness, not strength. Remains to be seen. Even the NVIDIA deal last week, even though they kind of bought this startup for $20 billion and people were oohing and awing about it, I think they sense some weakness in their overall competitive positioning, and that's why they had to do the deal. They have the money to do it, so it sort of fills a gap for them. But I don't think like anybody should go out and rush and buy Meta stock tomorrow because they spent a lot of money today.
Okay, good to know. I want to get into some of the other kind of not Mag 7 stocks. You've got a couple of picks here, a couple of tech stocks. We'll start with EMJX. This is a new company, full disclosure. You founded this company, so it's no surprise you like it, but tell us a little bit more about it and why you like it.
Yeah, I'm biased, obviously. But as we come to the end of 2025, I mean, one sector that's done really the worst are the treasury companies that were all the rage in the first half of the year. You know, everybody was trying to do a Me Too version of MicroStrategy, and I never really understood like how you could say one was better than the next, and really what's the long-term advantage even for someone like a MicroStrategy who's just stated purpose is just to buy and buy more Bitcoin. But so I started EMJX, and we just did a reverse merger with the New York Stock Exchange listed company called SRXH, and we announced it a couple of weeks ago. But the whole purpose of EMJX is let's do a Generation 2 version of a treasury company, because everybody has a treasury. So Bell Canada has a treasury. You know, Canada Pension Plan has a treasury. Any corporate or institutional investor has a treasury. And today it's mostly like U.S. dollars, maybe Canadian dollars, some treasuries, some cash. But in the future, more and more people are going to have crypto assets as an increasing share of it, just like MicroStrategy has a single asset kind of treasury. And somebody's got to manage the complexity of all these treasuries, the value of Bitcoin or Ethereum moving up and down constantly, being kind of a drag on your valuation as a company. There are some companies out there, you know, with $1 billion worth of Bitcoin sitting on their treasury, and they move up and down. So EMJX, our whole goal is to help those companies route the risks that are constant in the crypto world, manage a diversified treasury of tokens, crypto assets, cash, regular stocks, and make sure that they're generating yield from it, that they're hedged from any downturn. And we do that through different AI models that we've built. So we're going to have our own treasury that we kind of dog food and show off to the world, but we're going to look to do deals with others where we can help basically be that risk layer kind of managing their treasury. And so it's really more of a Palantir model than trying to be a better version of a MicroStrategy model, although we expect to be that too.
Okay, just very quickly in our last 40 seconds or so, another pick you have is Nextdoor Holdings. This is something you're watching. Why is that?
So Yelp is kind of like seen as evidence that like, well, local has sort of failed. And Nextdoor is a company that has 100 million registered users who've, you know, verified their identities and signed up for local news, but it hasn't really done much to this point. But it's partly because AI didn't exist before this point, and now this becomes a really fascinating company. It's not just an ads company for your local neighborhood that you join to kind of find out like what, you know, who knows a good local plumber, but they're going to harness AI to say, hey, Lindsay, you looked for a plumber last week in your neighborhood. Hey, did you know that there's going to be a plumber coming to your area next Wednesday afternoon? And your neighbor Tara used the plumber and really liked him, and because he's going to be in the area anyway, we can offer you like a 30% discount for his normal fee. So there are all kinds of lead gen services that are going to be possible with this company Nextdoor in these next 12 months that are going to truly make people sit up and take notice and say, hey, this isn't a boring failed ads company like Yelp. It's something very different and that's made possible by AI.
Very interesting. All right, we're going to have to leave it there, though. Eric Jackson, President and Portfolio Manager at EMJ Capital. Thanks so much for joining us.
Thank you.
Well, coming up, the federal government says it will be introducing regulations for stablecoins in the new year. We'll get more on the stablecoin outlook for 2026 when we come back. Earlier this month, the Bank of Canada said future stablecoin regulations must be backed by high-quality liquid assets. The governor of the Bank of Canada, Tiff Macklem, said stablecoins need to be good money, like banknotes or deposits at a bank. However, for those in the industry, many are worried that Canada is falling behind on stablecoin regulation. For more on this, we were joined with Jillian Friedman, Chief Operating Officer at Symbiotic.
If you zoom out and look just at digital asset prices, Bitcoin is doing considerably better year over year. But really, what I think we should be looking at is how the underlying technology is being adopted and used, and how it's actually adding value and creating value beyond the broader crypto ecosystem. So I would say 2025 was a bit of a breakout year for crypto, because you actually started to see adoption of this technology, and this technology being taken seriously by traditional finance and other types of fintechs that aren't necessarily crypto businesses.
What changed? What do you think changed then to see that happen?
Yeah, I think one of the major changes that you really can't look at 2025 without acknowledging the shift in the political and regulatory climate in the United States. That was a major difference in 2025, that previously the regulatory environment in the United States was bordered between ambiguous to outright hostile towards these types of businesses that are building and using cryptocurrency or on blockchains. And what changed in 2025 was really an endorsement and a willingness to create a regulatory regime that provides clarity to builders so that they have the confidence to actually invest in and build products. And the other major change, I would say, or they're related, would be the uptick of stablecoins and the use of stablecoins by businesses and retail users to move money around globally.
And now Tiff Macklem talked about stablecoins and having regulations for next year. What would you like to see? One of the things he talked about was that they need high-quality liquid assets pegged one-to-one to a central bank currency. Your thoughts on that, and what would you like to see?
Yeah, I think most would say that the requirement that the assets be pegged by one-to-one and with a high-quality liquid assets held, in custody in bank accounts with financial institutions is pretty middle of the fairway of an expectation. Seems to be consistent with some of the other regulatory regimes that other countries are implementing. And so overall, a positive approach from the Bank of Canada, and frankly, one that would have been hard to predict at this time a year ago. There was a lot of drum beating saying that Canada's moving too slow. We need an approach with stablecoins. Look at what's happening in other jurisdictions. Stablecoins are enabling further and further U.S. dollar dominance, and Canada needs to catch up. And I would say that still is the case, that Canada needs to catch up, but the current approach seems to be setting the stage to allow that catch up to take place.
And now you also, in that speech, he promised more innovation in 2026. What do you think we'll see when it comes to that, or what would you like to see?
Sure. So I think what we can expect to see is more of a blurring between fintechs and crypto businesses. I think you may be a user of a fintech service, whether you're a business or a retail consumer, and you're using blockchain or crypto on the back end, and that's what's operating on the back end, and you're not even aware of it. And so I think you will just see a more and more mainstreaming of this technology, and that it's being abstracted such that users don't even know that they're really using it. I also think that the regulatory clarity, specifically around stablecoins, is going to enable enable Canadian financial institutions to more meaningfully first test, but then adopt this new tooling where it makes sense for them. And so those are two areas that we're paying close attention to, and further, we would expect to see a discussion around, what happens to the interest or the yield that is generated by the reserves that are backing those stable coins. And so that's a discussion that you're starting to see happen in the United States. It's starting to happen here as well. It hasn't really been addressed by the regulators yet, and it provides a real opportunity for Canada to differentiate itself.
Okay, we're almost out of time, but you talk about in the report you had that you would like to see this change from securities to a payment instrument. Why is that so important? You got about 30 seconds. Because their stablecoins are primarily used as payments, and so the regulatory framework that addresses payments would be more appropriate than a securities framework, which makes it much more onerous to freely transfer these assets globally or between different owners.
That was Gillian Friedman, Chief Operating Officer at Symbiotic. Well, coming up, an energy source with a radioactive history may be our economy's saving grace. We are going to dive into that right after the break. Stay with us. Welcome back. This year, the nuclear energy sector saw new investments from the Canadian government to meet a growing demand for safe sources of clean energy. Are we entering into a nuclear renaissance in 2026? Joining us to help paint a clearer picture is Ahab Abdelaziz, Global Director of Nuclear Power Generation at Gowling WLG. It's good to have you join us today. Thanks so much.
Thank you for having me.
So we're seeing quite a renewed interest in nuclear energy in Canada. We did particularly throughout the course of this year. What's driving that interest?
I think what's driving that interest is really two large movements. One is geopolitical and energy security, and understanding that in Canada we have a natural advantage. We have homegrown nuclear technology, a robust supply chain, and homegrown uranium reserve, some of the best in the world. And on the other side, the world has come to absorb what we've been told for decades by scientists, the likes of Sokola and Pekala, which is that we need to triple the installed nuclear capacity to have any opportunity to address climate change. And so credit to our provincial governments and our federal government. They have stepped up, and in 2025, we went from theory and discussing whether we should engage with nuclear to how are we going to do it, and we're actually deploying the West's first small modular reactor and preparing to deploy large reactors. So we've got a lot of very strong policy drivers and governments that are attuned to those needs and that have stepped up.
It's interesting now that we consider nuclear energy to be a clean source of energy, right? You talked about how it's going to be helping to address the issues that we're going to continue to see when it comes to climate change. Is nuclear energy a form of clean energy now? Like, would you agree with that?
I think it has always been, to be honest. What's different about nuclear is that it scares people, and understandably so. It's a complex technology, relatively new in human history. And people got introduced to it with the bomb, but the bomb and nuclear power reactors are two different things entirely. And nuclear reactors, time and again, have been shown to be one of the cleanest sources of energy in terms of emissions, in terms of impacts on the environment, and in terms of the impacts on human health. It's a very far cry from fossil fuel.
We know that the Trump administration has also made some intentions to join that race to expand their kind of energy sector. Does Canada have any leverage here when it comes to just how much nuclear energy we produce? And maybe do we have some leverage in terms of these CUSMA talks we're going to enter into in the new year with our energy and our energy sources?
I don't know whether we are in a position of leverage vis-a-vis the United States. We're certainly in an excellent position as a nation, we're in a unique position having the fuel, the technology, and the supply chain all in one country, which means that if we came to it, we wouldn't have to rely on foreign suppliers. I suppose that could be seen as some manner of leverage.
Got it. You've mentioned as well that AI could be a helper or a driver when it comes to nuclear energy in the future, but it has to be done safely. Can you elaborate on that and how AI could help?
Sure. So if you think back to the last 20 years or so in Western nuclear projects, we have not done very well delivering projects. And it's not a question of the regulators being overly uptight or industry not being able to address its responsibilities. We just have a very high degree of complexity that's come in because of uncertainty and very low tolerance for risk. And so we can reduce uncertainty if we can rely on artificial intelligence that can monitor thousands of sensors simultaneously and respond and help humans respond better than they did with 3 Mile Island and Chernobyl, which really did involve breakdowns in human decision-making. What we don't know yet, and we've been warned quite significantly about, is whether we can deploy AI safely in nuclear power operations and what it takes to do that. But that became the focus of the first International Atomic Energy Agency symposium in 2025, late in 2025, on exactly these questions of integrating AI in nuclear construction and operation, what the benefits are, what the risks are, and how we get at safety. And our own regulator, CNSC, together with the US NRC and the ONR from the UK, have published what's called the tripartite paper on that. And so we've had a lot of warnings from the likes of Jeffrey Hinton that there is a great deal of complexity and potential risk with AI. And while it can be very beneficial, and there are already attempts to bring that technology to bear, and it could really be the difference maker for us. We need to deploy, if we're tripling the world's installed capacity, something more than 900 reactors in a circumstance where the West's largest supplier so far has been EDF. And 2 years ago, their president was on the podium saying they aspire to deliver 1 reactor a year. So clearly, we would need to be able to deliver more than that. One way to do that is to reduce complexity and uncertainty, as long as we can do it safely.
So interesting and so much to watch for. Okay, that's all the time we have, though, right now. Ahab Abdelaziz from Gowling WLG. Appreciate your time today and your insight. Thanks so much.
Thank you very much. Happy New Year.
You too. Happy New Year. Well, the end of 2025 means the end of an era. Berkshire Hathaway CEO Warren Buffett is set to retire at the end of the year, and we'll take a look at what comes next for his legendary firm right after the break. Shares of FTAI are soaring today. The American company has started a program to convert its aircraft engines to power new turbines to support data centers. Production is expected to begin in 2026. The company expects the program to have the capacity to deliver more than 100 units of power turbines annually. And silver has recovered some losses after its biggest one-day drop in more than 5 years. The metal climbed above $74 an ounce today after a 9% slide in the previous session. Gold also edged up after its steepest drop in 2 months. Now, despite the pullback, gold and silver remain on track for their best annual performances since 1979. And shares of Meta are rising today as well. The tech conglomerate has agreed to buy Manus in a deal valued at $2 billion US. Manus is a popular Singapore-based artificial intelligence agent founded in China. The transaction marks a rare US acquisition of an Asian tech company. A Meta spokesperson has said there will be no continuing Chinese ownership interests, and Manus AI will discontinue its services and operations in China. We'll take a look at the TSX today, trading up after a bit of a loss yesterday. You can see over the last year just how much it's climbed, particularly since April. If we take a look at U.S. markets, though, not really the same story here. Most are trading a little flat today. Stocks fluctuating. Traders in the U.S. waiting for further signs or further hints that the Fed might cut rates in 2026, and that seems to be affecting the markets a bit today. Legendary investor and Berkshire Hathaway CEO Warren Buffett is retiring at the end of this year. Here's how the Oracle of Omaha changed investing forever and what's next for the company that he built. This Bloomberg doc dove deeper.
If investors had a Hall of Fame, Warren Buffett would occupy his own wing.
People from all over the planet look up to him, read his biography, hop on a plane to go see him talk.
He took a failing textile mill and turned it into a $1 trillion conglomerate. It has insurance companies, Dairy Queen, railroads, and energy businesses.
For decades, Buffett's investment savvy has led Berkshire Hathaway to beat benchmarks.
One of the biggest asset managers today, which is Vanguard. The entire philosophy is no one's really going to be able to beat the market, so you might as well not even try. Well, okay, no one besides Warren Buffett.
If you look at the total returns, Berkshire blows the S&P 500 away.
The legendary investor Warren Buffett.
So when the 95-year-old announced he would retire at the end of 2025,
Greg should become the chief executive officer of the company.
It marked the end of an era at Berkshire Hathaway and left everyone with one massive question. Warren Buffett is one of the richest people on Earth, but his lifestyle doesn't exactly scream it.
He lives in Omaha. He lives in the same house he's lived for many, many years.
Holiday sausage muffin with...
He goes to McDonald's in Omaha. A lot of people around the city know him.
He's paid just $100K and has been paid that amount for years. That's very refreshing when you think about the landscape today.
So what's the backstory? Well, Buffett's childhood fascination with money led him to Columbia Business School, where he studied under a renowned educator.
Benjamin Graham was a financial analyst considered to be the father of value investing.
Value investing is really this idea that you're not just betting on some fluke in the market. You're really looking at what you think it's worth versus what the value that the market is providing. Ideally, you want to buy a company that you think is undervalued and that it's going to rise in many years. But that requires a lot of due diligence. That requires you to make sure you actually understand how the business works.
I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now.
Investment after investment, that strategy came to define Berkshire Hathaway. But let's see it in action by focusing on just one.
American Express is an investment that he's had for decades, and when he bought it, the stock price was a bit down because of a scandal at the time, but he saw the value of Americans that kept swiping those Amex all over the place.
That was back in the 1960s. But look at this. Berkshire's current Amex holding was largely assembled here in the 1990s for about $1.3 billion. Since then, Buffett's largely left that core stake intact. But Amex's market value has soared in the years since, making his 22% holding worth tens of billions of dollars.
He was interested because the company has a good moat. By moat, he means some competitive advantage against other companies in the business.
For Amex, that moat is a mix of its premium brand, affluent cardholders, and a network built around their spending power.
Another kind of edge you can have over your competitors is regulation.
Think about the energy business. A lot of those have advantages that a competitor couldn't come in and easily take the market share. That's really helped his business sustain itself. He's built up companies that are not so easy to replicate.
But perhaps the most underappreciated force behind Berkshire's rise is its insurance business.
They're not always the companies that are going to draw the hype from stockholders, but it's actually been a force that's built up Berkshire a lot.
The insurance business provides us with float, and float is money that we hold that doesn't belong to us.
The way it works is it has a very large insurance arm that has a lot of money from policyholders. they have to invest it to reap some benefits and make sure that they can pay claims afterwards. Berkshire Hathaway has been ramping that up to the max, buying a lot of insurance companies and using that money, the float, to invest afterwards.
This is actually one of the hottest plays in the investment world right now, with a lot of private equity and alternative asset managers either buying or having relationships with insurers.
While Buffett has been the face of Berkshire Hathaway, he long had a sidekick. Both conveniently available as lovingly hand-rendered plushies.
Charlie Munger passed away in 2023, but the dynamic he had with Buffett for many years was one of the main draws of Berkshire. They were a unique pair. If you saw them sitting together at the Berkshire annual meeting, they would banter.
I predict Charlie's going to talk about Costco. Go ahead, Charlie.
Well, Costco, of course, is a...
Munger was fundamental to Buffett's investing thesis. At the start of his career, Buffett was very into this idea of cigar butt investing, in which you would take a company, you'd take one last puff, and you'd get what you could out of it before it sort of faltered. And Charlie was one who really reshaped his thinking into thinking about companies that had a longer-term advantage.
He went from buying companies that were, not very famous, like Berkshire Hathaway, a textile mill that was struggling, to taking stakes into Coca-Cola or Bank of America.
Not that this approach is always a sure thing.
One is IBM, when he bought a stake in the early 2010. He said afterwards that it was a big mistake. He didn't see how IBM was about to lose the turn of the industry towards cloud computing.
He also orchestrated the merger of Kraft and Heinz about 10 years ago.
It just hasn't gone to plan. Part of that is down to changing consumer tastes, consumers wanting healthier things. Part of that is down to inflation. And Buffett commented recently that while he didn't think the merger in hindsight was a great idea, he doesn't think that undoing it is going to fix the company's problems.
And lately, Buffett has struggled finding companies he wants to invest in, leaving Berkshire with a record amount of cash.
It is so much easier to make very successful bets when you're managing $100 million, $200 million. He's now got a cash pile that's more than $300 billion.
And finding a place to put that capital to work is getting really difficult. He doesn't like to have money that is sitting around and not earning more money.
Higher interest rates these past few years have turned that cash pile into a nice income generator.
But it is going to get harder and harder to deploy that level of capital the bigger it gets.
So this is the Berkshire Hathaway Greg Abel is inheriting as the company's new CEO. Although sadly, we don't have a plushie of him.
He led Berkshire's energy business for so many years. But it is tricky. Warren Buffett has not only been a very good investor, but he's also pretty charismatic. That's part of the reason that so many investors have always made that trek to Omaha despite the cost, despite the distance.
Abel will also be taking charge at a time when Buffett's hallmark strategy is being tested.
It is tough to be a value investor when what's really lifting the stock market is high-growth companies. The tech company's valuation might be really high compared to sort of what the underlying assets are. While Buffett has bet on technology in recent years, his misses on those opportunities will always sort of linger.
The change in leadership also risks reviving a long-standing debate.
A conglomerate is not a thing that has stuck around. We've seen many conglomerates, such as GE, fall apart in recent years and sort of be split up.
Buffett's presence at Berkshire won't be disappearing overnight.
He'll remain as chairman, and I think his influence will still be felt by the company. He's a major shareholder of the firm, and while he's slowly divesting that stake and giving it to his children's foundations, I think his legacy will long be felt.
But Abel will be taking over many of his duties, including the writing of Berkshire's annual letter to shareholders.
This is a big change because Buffett fans have been poring over that letter over the years because it's full of witticisms, investment advice, pearls of wisdom. There's also the fact that he's not going to be taking Q&A at the annual meeting next May in Omaha.
Morning. Welcome to Berkshire Hathaway.
He was talking for 4 to 5 hours every year and taking questions from people that follow him all over the planet. That is going to be a big change because Buffett's personality is unmatched in the investment world.
Up next, we will take a look at some of the Mag 7 stocks and software companies that investors have a bullish outlook on. Stay with us. Welcome back. Let's dive into some stocks that have been on investors' radars. We were joined earlier with Rishi Jaluria, software managing director at RBC Capital Markets, and he discussed his hot picks in the software sector. We kick things off with Microsoft. Have a listen.
That's been proven to be able to reinvent themselves time and time again. Obviously they were, as you mentioned, a pioneer in software. But they really successfully navigated the cloud transition incredibly well. If you look at the momentum they had with Office 365, with Azure, with everything in their cloud suite. And now they're going through that again with AI, right? They were very early to AI, making the first investment in OpenAI back in 2019. And look, they're going down an AI first route, infusing AI throughout the stack. And what I think really impresses me the most about Microsoft, or what makes me the most optimistic about this thing, is the fact that I think they have the most amount of ways of benefiting from AI throughout the stack. It's not purely just using the raw compute capacity for training of models, but it's at the data layer with things like Fabric and Cosmos DB. It's at the developer layer with GitHub Copilot, at the application layer with Office Copilot, security layer with Security Copilot. We can even imagine properties like LinkedIn and gaming that are overlooked by investors today becoming material beneficiaries of AI.
So Microsoft, as big as it is, still seems to be able to adapt and lead.
I think that's right, and a lot of it definitely comes down to the leadership of Satya Nadella, who has been very forward-thinking throughout his tenure as Microsoft CEO.
What's he done the most that's impressed you?
I think the biggest thing that I think he's done that I've seen is really double down on innovation, right? The larger a company gets, the harder it is to actually innovate, to come up with new ideas. But he's created this culture of innovation, of almost having a more open ecosystem, a kinder, gentler Microsoft, so to speak, versus what we saw under the Steve Ballmer era, that Microsoft is willing to work directly and integrate directly with their competitors. And I think anything that breeds customer success breeds innovation, and that ultimately breeds company success. And I think that culture that Satya has created has allowed them to be so successful.
Okay, next up, MongoDB.
So MongoDB may not be a household name, but they're a next-gen database vendor. They compete with Oracle, but they're really focused on unstructured data. Think about data that can't fit neatly into rows and columns. And look, the stock's had a great run off the bottom. But what I think makes me the most excited about this one is really, if we think about the opportunity for the creation and development of net new AI applications, especially those leveraging this unstructured data, MongoDB is really well positioned, has the right technology, and I think this can be that developer platform of choice for those AI applications. We're already seeing some of these very hot AI natives like Cursor and Relevance AI using MongoDB, and as those companies become more material, I think that becomes a real tailwind for Mongo.
And what are some of the technologies that you like that they're incorporating?
Yeah, look, I think there's a couple things. Number one is just the ability to work with unstructured data, because working with unstructured data is a very fundamentally different problem than working with structured data, which is where you'd use something like Oracle or open source Postgres. But then I think it's also integrating a lot of these adjacent technologies. You think about things like bringing an Atlas search, a vector database with MongoDB Atlas Vector. Now they're leveraging AI to make it easier to move relational workloads onto a non-relational database, in this case, MongoDB. So I think it's really bringing in all these adjacent technologies onto this core non-relational database and expanding that, because that just leads to greater share of wallet, greater share of workloads. And I think, again, put some of that position that as we see the development of more and more AI applications, and those applications get scaled, that becomes a real tailwind for MongoDB.
Okay, and last up is HubSpot. What are you liking about that?
Yeah, so HubSpot is, I think, a really compelling company. I almost think about them as the anti-Salesforce. They're in the same spaces as Salesforce. You think about sales, service, marketing, commerce operations, et cetera. But in contrast to Salesforce, HubSpot is a company that has been built from the ground up organically. So all those different modules that we've talked about are built on the same platform versus through a string of M&A, which is what we see out of Salesforce. And I think this is, again, a company that is really investing in innovation, in customer success. And I see two ways that HubSpot can be a major beneficiary of AI. Number one is I think they have one of the most forward-leaning AI roadmaps in front office application software today. And really that comes down to their co-founder and CTO, Dharmesh Shah, who is probably more hands-on with AI than any public company exec, at least in this market cap range that I've seen. But I think the second thing is I believe they can leverage the innovation that AI brings and accelerate the pace of product development and use this as a way to narrow the gap versus Salesforce, because Salesforce definitely competes in the large enterprise. Just think about the Global 2000, whereas HubSpot tends to be more in the mid-market. Over time, I think that will change, right? If they can use AI on the product development side, create those governance and security and customization capabilities that are necessary, I wouldn't be surprised if we see HubSpot win a deal in the Global 2000 against Salesforce in the next 5 years.
That was Rishi Jaluria, Software Managing Director at RBC Capital Markets. Still ahead, today's market movers with Bloomberg's Matthew Griffin. That's coming up right after the break. Know Your Options is back. You can tune in tomorrow at 3 p.m. Eastern Time to have all of your options trading questions answered by Chris Tom of Moat Financial. You can email us your questions at knowyouroptions@bnnbloomberg.ca. And now for some movers south of the border. We are joined by Bloomberg equities reporter Matthew Griffin to break down some of the big stories today. Matthew, great to see you. Thanks for joining us. I believe we'll start with Ultragenyx. Those shares jumping today, the most we've seen in a year, even after they hit a record low yesterday. What's behind this rise, and will we see it continue into the new year?
Thanks so much for having me on. Ultragenyx is rebounding today after a 42% drop yesterday, and it all really comes down to investor expectations for which drugs being developed by this biotech will succeed. If you look at the sell-off yesterday, Ultragenyx said that 2 late-stage trials had failed to meet their primary endpoints. Those were both for a treatment for a rare bone disease. And for a biotech company where their fortunes can really turn on the success of a drug, that can be just crushing. Again, shares closing at a record low yesterday. Now today, analysts at Jefferies say the stock could rebound next year as investors position ahead of another data readout. That's for another late-stage trial of a drug to treat a disease called Angelman syndrome. That one's a rare genetic developmental disorder. Seems like today investors are trying to do some of that positioning in advance, get out ahead of that. Of course, the key question remains, which is, will this study deliver what the last couple of data releases couldn't and give investors some hope for this company's treatment? And I think that question is what's going to determine whether this rally eventually is sustainable.
No doubt. So interesting. What's also interesting is FTAI Aviation, these gains we're seeing after this engine conversion plan was announced. This is such an interesting plan. Tell us more about it.
Yes, I think this is interesting at a company level and also at a stock market level. So if you look at what FTAI Aviation said, they're a company that owns, maintains, and leases out jet aircraft engines. And now they're going to do something different with their engines, which is convert some of them to run power generators for data centers. You have shares up about 12% on this news. This could be a big opportunity for the company. Again, looking at Jefferies, they say this could be worth more than $750 million a year of EBITDA, so earnings before factors like taxes. That compares to what analysts expect will be about $1.2 billion for the whole company this year, so potentially substantial opportunity. If you zoom out, this is an example of what I think is a really interesting trend in industrials investing, which is investors are very excited about companies that have power equipment businesses, even if that's not what they're known for. So you look at Caterpillar, their stock up about 60% this year. They're obviously known for their bulldozers and backhoes, but they have a power turbine business. It's been a real catalyst for the stock. Cummins, similar story. They make truck engines, but are up about 50% this year, in part on the data center power theme, which all comes back to the idea that AI is going to drive demand for power equipment. And if you take a step further back, this is really playing out across the stock market. My colleague Carmen Reinecke has a good story out for Bloomberg today about these picks and shovels bets that investors are looking for. And this is potentially the next example of one.
So interesting. Bloomberg's Matthew Griffin joining us today. Matthew, thanks so much for that. And that wraps up this edition of Trading Day. Thanks for watching.